Welcome to Shoptalk with TNT. I am Tad Peterson from LakePlace.com Brothers Realty.
I'm Trent and Tadd with Farmers Insurance and Tadd Agency, and our guest today is Jen Swenson. Jen, can you tell us a little bit about your business?
Sure. I'm Jenny Swenson. I'm the owner of the Hotel Bar and Grill here in downtown Turtle Lake. We are a hotel, bar, and grill. It's all in the name.
Jen, when did you take over the hotel?
I've owned the hotel bar since July of 2007.
Okay. Have you made any renovations or done anything recently to do anything with it?
Yes, I have. Recently, we opened up the hotel again. So it used to be apartments upstairs, and over the coronavirus break, my husband and I, Mike, we renovated all of the apartments upstairs and turned them back into hotel rooms. They're still apartments, but we sell them as hotel rooms.
How many?
Three of them.
Yeah, yep, 3 units.
Going well.
Going very well. Yeah, we're. If you want to book, make sure you call right away because we we book up and we have a lot of repeat business here.
So they could find you on Airbnb, but they could also call the hotel bar directly and
Yes.
hear you directly.
Yeah.
Which
Yep.
is nice because it saves you a little bit of money.
It saves us and it saves the guest a little bit of money because Airbnb tends to charge the fees to the guest. It's a convenient way to book a hotel room, but if you're looking for a little savings, yeah, give us a call.
When people stay here, what do they usually do?
There's a variety of reasons to stay here. So some of it is for weddings or events. We've had a lot of over the summer cabin overbook. So going to visit the family at the cabin, but wanting a place just to yourself, especially with young children. Somewhere to go and give them a nap, take a shower, that kind of thing. A lot of business stays during the week, and that's a lot of our repeat business and a lot of our direct bookings from business stays during the week.
So maybe a little nicer place for an out-of-town business person to stay than a hotel.
Yeah, I think what people like about it is that they all have a full kitchen.
Okay.
So, they can cook for themselves. It's a little bit more like home when you're staying, especially people who travel for business all the time. When you're staying away from home, 7 days a week, it's nice to have something that's a little more home.
So you don't have to go out to get all your food or whatever else.
Right. But if you want to, we've got great specials
Yeah, I was gonna
downstairs
say
here.
that. I was going to do the next thing because I've been here a time or two. Fish fry on Friday night, taco on Tuesday night.
Yes.
Always good lunch specials, good food. Kind of a neat historic place in downtown Turtle Lake, and right across the road is a park, and I noticed a trail. So four-wheeling, snowmobiling, all kinds of stuff you could do here if you did stay here.
Yeah.
Or if you wanted to stop on your way to or from somewhere on your ATV or something.
Yes, yeah, it's good for that. We had a little bit of ATV business early in the spring, and we're hoping, we weren't open for the snowmobile season last year, so we're hoping that we get some snowmobile business this winter, and people can check out the trails of Turtle Lake, because we've got a lot of them, and they're really nice.
Yeah. Well, Jen, thank you. Again, Hotel Bar and Grill located in downtown Turtle Lake. Thanks for letting us give us this cool little American flag backdrop and a place to shoot our video.
You're welcome. Thank you.
Our questions today are just going over generic terms in our industry, so real estate and insurance, and we're just going over the terms that everybody probably has heard and most likely isn't 100% sure what it exactly means. So my question for you, the first one is, what is earnest money?
Okay, earnest money is it's like your down payment. So if a property is listed, it shows up on the MLS as active, meaning every buyer, every agent knows it's out there, it's active. Now, if you're a buyer and you write an offer on a property, and you come to an agreement with the seller, and you get a signed contract, it's going to show up in the MLS or on those other websites as active with offer or pending. So essentially, it comes off the market. So you put a certain amount of money down. There's no set amount. It's a negotiated number, but you put that earnest money down, and it's held in a trust fund or some kind of an escrow account, and it's held there in good faith that you are going to follow through with the contract you wrote and the seller accepted. If you breach your contract, the seller is going to make claims to that earnest money, and what that is for liquidated damages. Because if we get 30 days into a loan process or a purchase process, and you bail, that's 30 days on the market that the seller lost. So they're going to make claims for that earnest money for liquidated damages, time lost on the market. So that's what earnest money is. That's what its intention is. If you follow through with your contract, you close, you purchase the property, you do everything you said you did, and so does the seller, that earnest money is returned to you. It's a good faith offering saying that you're going to follow through with the contract. Okay? An insurance term that I think is worth talking about is a deductible. What's a deductible?
So a deductible, I'm going to explain it in the car insurance world. So let's say you hit a deer, you go to the shop, you call your insurance agent says, Tad, your deductible's $500. You go to the shop, you get the price, you get the estimate for it, it's going to cost $9,000 to get your truck fixed. And that $500 deductible comes off of that $9,000. So the insurance company is going to write you a check, or the body shop a check, depending on which one they do, for $8,500. So that last $500, you're on the hook for to get your vehicle back. The popular deductibles that we see is $100, $250, $500, $750, and $1,000 for cars. If you have a loan on your vehicle, most loan companies won't allow you to have a deductible over $1,500 or even over $1,000. For home properties, the most common one that we see is $1,000. I know some companies like to do percentages of your coverage A, so the coverage of your dwelling. I don't like that because it kind of moves back and forth. So the most popular one that we see and write is $1,000 deductible for the home. And for car insurance, it's usually $500 to $1,000, anywhere in that range. So
that's a fixed amount. So you pay your premiums, and the deductible is aside from that. So if you do have a claim, on your car, say it's whatever you said, $9,000, you're going to pay essentially $500 so you can get the $9,000.
correct.
Okay.
Yep. And I've always seen that when I'm talking to people about doing deductibles, is my biggest question to people is how comfortable are you to paying out that deductible? Are you okay? Do you have $1,000 sitting in your bank account just waiting in case something bad does happen? And if you are comfortable with having $1,000 deductible, that's going to lower your rates, because the higher the deductible, the lower the rates are. So.
Okay. So the higher my deductible I pay, probably the lower the premiums I pay.
Yep, correct.
Because you as a company are on the hook for less.
Correct.
Okay.
So, my next question to you, Tad, is what is an escrow? What is it for? I hear a lot of people in our industry, I talk to people about escrows, and most of the time, nobody knows what I'm talking about. So what's an escrow?
Well, by definition, an escrow is a third party that's holding an amount of money for some action to take place later. So, going back to earnest money, a third party could be holding earnest money in waiting for a buyer and seller to complete a transaction. That's kind of the definition. You'll hear terms like, with my loan, I have an escrow account for my insurance or my taxes. What that means is the bank has an escrow account for you, which is they're like if your house payment's $500 and your insurance is $500 a month, and your insurance is $600 a year, the bank's going to take $550 from you every month and put $50 into an escrow account, and then at the end of the year they're going to pay your $600 home insurance. I think home insurance is a little higher than that, but you get the idea. It could be earnest money. It could be a third party holding earnest money. It could be that bank hold. It could be for anything. The definition is a third party holding money for something to take place later in life. You'll hear terms like around here. A lot of the agents will say, like, if there's a property that has an offer that's been accepted, you're going to hear, there's an accepted offer on it, or it's pending. Some places will say, well, that property's in escrow right now. What that means is it does have an offer, it is accepted, it is pending for sale, But when they say it's in escrow, what they mean is if a buyer's written an offer and the seller and buyer have come to terms, the buyer has put earnest money down, it's being held in escrow. So that's what they mean by it's in escrow. So in definition means it's a third party holding money for some action taking place later. But there's some it's kind of thrown around a little bit as far as that term goes. Does that make sense?
Yeah, absolutely.
Okay, so two terms that I hear, compare the two. Comp insurance versus collision insurance. What's the difference between comp and collision?
Okay. So comp and collision, the most popular places that you're going to hear it as is on your car insurance. Comp is for if you hit an animal. That's the most popular one. So if you hit a deer, that's going to go under your comp insurance. Collision is if you hit something else, if you hit a telephone pole. A great scenario is you're driving down the road, you see a deer, you swerve to miss the deer, and drill a tree. What's that under? That's going to be under collision now instead of comp. So if you would have hit the deer, it would have been under comp, but because you hit a tree or a pole, it's going to be under collision because you swerved off and didn't hit an animal.
What differentiates the two?
Comp is
4 legs and a walk. It's comp.
pretty much, or if it's a bird or something like that, it's a different item. Collision usually is you ran into a car, you ran into an object that's not going to really move,
Okay.
and that's the easiest way of kind of defining it.
Okay.
It's not. I always like to tell people that, most of the time people ask, "Hey, well, can I just have collision instead of comp?" And on your car insurance, so I usually just ask them, "Okay, why do you want collision versus comp insurance?" And the biggest one is, well, if I hit a deer, I want to be able to be covered, and that's where you have to educate them and say, actually, that's under your comp portion of your car insurance, not your collision part of your car insurance.
Okay.
So, most popular we see is people with older vehicles, especially in our neck of the woods. They have their liability insurance, and then they have comp insurance. So if they do hit a deer, they hit a bird, they hit a turkey, anything fun to shoot at, that it's going to be covered. So
you kind of talked about liability. Liability is what would liability insurance be then?
Your liability is going to cover, for your car insurance aspect of it, your liability is just going to cover the first part, any damages to buildings, to properties, or anything in that. So that's its own separate liability.
Okay. Damage to other things.
Yep.
Okay.
And then on your car insurance, it's going to say property damage. And then the other part of it is taking care of people's medical portion of it. So
that's why that number's so high.
exactly.
Okay.
Yeah. So when you see car insurance, you see one number, a middle number, and then a last number. The first number is per person, the middle number is per occurrence, and then the last number is for the property damage. So a popular one that we see is 100, 300, 100.
Okay.
So you got 100 per person, 300 per occurrence, 100 for property damage.
Okay. Okay.
So,
All right. Thank you.
yeah. So we kind of wanted to change this up just a tad.
That's a big.
Yeah, tads are big. So we're going to do a random question to each other. And my random question to you this week, Tad, is what is your shortest closing that you've ever done? From the time that you've either listed it or you've had a seller go to it and write an offer to the time that they have the keys or they have the land property.
Well, interestingly enough, Trent, that will actually happen a week from today. I had one last Friday that it will tie a couple others. I've tried to do them faster and they just haven't worked out. But it's 2 weeks. It's Friday to today's the Friday off, and then next Friday it will close. So, and those deals have to be cash. They have to be, essentially contingency free, meaning no inspections, no testing, no appraisals, no surveying. Really, just pretty much saying, give me the keys in 2 weeks. there is a certain amount of time where the property sits in escrow, and there's research that needs to be done on the deed and the title, and passing that on to a seller and making sure it's clean. But 2 weeks is about as quick as it can go. It'll actually, if you see the estimate, that will happen next Friday.
Well, that's a fast turnaround.
Yeah.
And you know, it's always kind of cool to hear how fast deals can be done.
Well, cash is king. I mean, if you have cash, that means you don't have to wait for. And I'm not picking on lenders, but there's benchmarks they have to hit. There's things they have to do to protect themselves. So that, as far as a loan goes, it depends on the type of loan. But I mean, I've seen loans take a long time. But I've seen people do lending in 3 weeks. But it generally means that they have a lot of collateral, or they essentially have the money sitting in their account that they could pay cash, but they don't want to for whatever the reason is. The interest rates are good right now, and they don't want to spend their cash. Does that make sense?
Yeah, absolutely.
Okay, my random question isn't so much serious. So I Googled your website, and so I guess my official question would be is, I have insurance through you for, I know I have for a four-wheeler,
Yep.
a boat, my personal house, my vehicles, I believe two rentals, and then I have two other rental buildings that I don't have insurance through. I have through a different company. Is there an advantage, like a volume discount? I mean, the more things that you have insured through farmers, is there a volume discount?
Yeah, so you'll hear the word thrown around quite a bit. It's called a bundle. So that's when you're bundling all your insurance together and you're getting the multi-line discount.
Okay.
So for us, our biggest ones that we see are home, auto, umbrella, life, and then recreational vehicles. If you have a landlord policy, if you have a business policy with us, them are all the different types of packages that you can get. So then with the multi-line, you get a discount for each one going down it. So the more things that you bring to us, we can all bundle together, the cheaper your insurance is going to be.
So, let's say I hit a deer with my truck. Does that have any effect on, anytime you have an accident, your insurance is up, correct?
Mm-hmm.
So if I hit a deer with my truck, does it affect other things that I have? This would be the question my dad would ask, right? So he's thinking of that generation. Does that thing on my vehicle affect my policy on a rental building?
No. So your car insurance isn't going to affect your other insurance premiums based off of that.
Okay.
We see a lot of people, they'll have rental units, and it'll be a big commercial policy, and it'll be like 20 rental buildings all tied into this one policy. Well, then they'll go and then they'll have a small claim on probably their smallest unit, because that's how it's going to work out. And because it's on one policy, that whole policy is going to get more expensive because they had that claim.
Okay. So like if I hit a deer with my vehicle and I have hail damage on a rental building and my house gets hit by lightning, they're not going to count those three events and then just say, hey, we're canceling everything because you're too dangerous. It's going to affect those individual ones, but
correct.
not as a whole.
Yeah, correct. It's going to go your car insurance for hitting the deer, your rental one for the hail, and then I forgot what you said about the house, but then that against the house. So
It's separate.
Yeah, it's all separate.
Those are all separate events. Yeah, so I was Googling your website and I saw this website called farmersonly.com. I thought that was like a select group of people that, like, if you had everything in farmers, you got to belong to this farmers only. But I was wrong. That's not what it is at all.
Did you meet some new friends?
I didn't partake. I just browsed for a minute and realized that I had made a horrible mistake. Did something else. Again, thanks to the Hotel Bar and Grill. Give them a call. Stop down there for some food, a drink, whatever. Hotel upstairs. If you're on our YouTube video, make sure you hit the like, the subscribe, the notification bell. Leave us a comment.
I think me and Tad were thinking about doing. We might do some drawings for the businesses that they're letting us come in and do this video at. So if you put a comment below, there's a chance that you might win a gift card to someplace. You might get something. We're really just trying to support our local businesses in the Turtle Lake area, but then also kind of get our business out there more so people understand what's going on. So once again, I'm Trent and Tadd, Farmers Insurance.
Jack Peterson with LakePlace.com, Brothers Realty. Thank you very much.
Thank you guys.